and welcome. Tesla stock is down 4% today. It was down as much as 6-7% in the morning. Recovered a little bit. Other stocks have recovered a little bit as well. Bitcoin has recovered. MicroStrategy is in plus. Nvidia is up 2.5%. All those stocks are down today quite a bit. Most other stocks and other related stocks are down. So Tesla's getting hit because of that. Overall markets are, Nasdaq is flat actually. Google is up 2%. Meta down. So Google and Nvidia are carrying Nasdaq today. And semiconductors are mostly up as well. I think Apple is flat as well. Let's see what else here. S&P 500 down 9 and 90 basis points. Dow Jones down 1%. Russell 2000 down 1%. So it's still a down day, but it's not as bad as in the morning. Yield curve has steepened today. The short end is coming down a little bit. Markets are pricing in another rate cut from the Fed. I think this is premature, but maybe I'm wrong. Let's see here. Oh, I see Chris if he wants to come up. I see Lucia. Lucia, welcome. Let's see. Markets are currently pricing one cut by May. So, 50-50 by May. So an additional cut has moved to May basically, and most likely by June, according to markets. And by year end, markets expect, let's see, 1, 2, 3 cuts now. It's going on to 4 cuts. Wow, that's crazy. That's wild. What a difference does a week make? That's wild. Let's see. Give me 1 second. So December 2025. They're almost putting in a 4th cut now this year. That's crazy. And a week ago, we expected 2 cuts. And a month ago, 1 cut. Yeah, things have gotten really bad in the according to bond markets. I think people are jumping the gun on this. I think the bond market is jumping the gun here. I don't think we have, even 95, even like 60% likely that recession has started. And I can't definitively say that a recession has started already. But the bond market is pricing in now almost 4 rate cuts this year. And we haven't also heard from the Fed at all. I mean, the Fed hasn't really indicated that they want to cut rates. I think that given the current picture, current economy, what I'm seeing in data, I think the Fed will hold off a little bit. I think they're going to continue to be hawkish. And so I don't know what the markets are thinking. Lucia, what do you think?
I honestly think, Yaman, that the market is just looking to size opportunity for the deep buyers that are in. But I also think that it's premature, it's too early, and there is a lot of chaos and a lot of missing information for predicting what the future is.
Can you hold for 1 second? So we have some static on YouTube. So I'm going to fix that real quick. Now we're going to continue. Thank you, Justin, for letting me know. Give me 1 second. We have some static on. Okay, Lucia, please continue. We should be okay now.
So, Yaman, if you see, the government of the USA needs to refinance 7 billion of debt before the end of 2025, for what I know. and they can do it right now with very high yields for the 10 years treasury, or if Trump causes a lot of chaos in the equity market, the yields will go down. As you said, there might be rate cuts, and they might be able to refinance the debt at a lower rate. So that is the thing that makes most sense to me. But whatever is the case, I think it's too early to buy the dip. And in fact, I've seen that I have seen that for months the best opportunities were short, honestly. And Yaman was able to size very, very good opportunities there, and I'm looking for that as well. I don't think it's a good idea to go long at this point. This for me.
All right, Lucia. Thank you very much. I know a few people that are going long. I actually, I have some data that shows retail investors are buying the dip on both Tesla and Nvidia, and this is as expected, I guess. But we'll see. We'll see what comes of it. It's hard to kind of gauge what happens next with this kind of data flows. All right, or at least I can do it. Let's see. Tesla's now down. It's such a volatile day. It's crazy. Tesla's now down 5%, and it's also below its 200-day moving average now. So to the extent that people are following technical analysis, both Tesla and Nvidia technical analysis shows continued downward trend for the foreseeable future. Both strong sell according to moving averages, and the oscillators don't show any sort of oversold conditions. Let's say on a 1-year graph. But there's some early, it's kind of crazy that the stock doesn't show any sort of oversold conditions right now, despite this massive drop. On both stocks, I think it's still heavily bullish. This kind of arguments I'm reading online just really off hinge. So it's kind of hard to get bullish when I'm reading this nonsense. Lucia?
So Yaman, I spent like two of the last weeks to try to find any long opportunity. I really did, like analyzing company over company over company, but I really can't find anything. And the market is extremely bullish, as you said. It's so hard to find any opportunity, at least for me. It's impossible.
I'm long Occidental, and yesterday it sold off quite a bit with OPEC news and everything. But I think fundamentally it's an undervalued company. Go ahead, Richard.
But don't you think that Trump policies might make the oil be cheaper, and Oxy might have lower revenues because of that?
Yeah, I think oil is a global commodity. I don't think there's much U.S. can do one way or another. And there are companies better positioned than others for volatility in oil prices. So, all right, let's see. Let's kind of go through this article. Give me 1 second. NASDAQ on course to confirm correction as trade war worries away. Yeah, I think NASDAQ technically got into a correction like a 10% drop. Wall Street's main indices fell on Tuesday with the tech-heavy NASDAQ on course to confirm a correction as investors feared that an escalating trade war between U.S. and its partners could damage the country's economy. NASDAQ was on track to fall into correction territory, having fallen 10% from its record closing high on December 16. financial weighed on all the three indices, and those on the S&P 500 led sectoral declines with a 3.6% drop. Yeah, that's also interesting too. I don't know why. Like Bank of America today was selling off really sharply. It was down about like 7-8% in the morning, and now it's down from the recent highs of more than 10%. And I'm not quite sure why exactly. It's P ratio of about 13, dividend yield of about 2.4%. And it's trading near highs and everything, but I think this is more in line with a recession worries as opposed to some of the other theories that we're seeing out there. Let's see. Okay, let's continue. Lucia, go ahead.
I wanted to ask Yaman, how are you able to, what kind of sites or resources do you use to have a complete picture of the current microeconomic events and the recession thing? Like, what resources do you keep an eye on?
I just look at the source data. I don't really read many people's opinion. Jimmy? Jimmy, go ahead.
Thank you very much. Sorry, what was the question?
I have a question. You request to speak. Okay, let me continue
I'm
here.
here.
Wall Street's biggest banks, such as Citigroup and JP Morgan, fell 7% and 5%. Oh, I didn't realize JP Morgan was also down 5% today. Let's see. I recovered a little bit. Yeah, that's a big sell-off. I was actually looking to short financials, but I thought that these stocks would go down next year, but maybe I'm too late, which never happens. Okay, let's see. CBOE market volatility added 2 points to touch a 2-month high. Yeah, volatility is still very low, and credit spreads are very tight as well. The latest trigger for equities came after the US tariffs on imports from Mexico and Canada, along with its doubled duties on Chinese goods that took effect on Tuesday. Following this, Beijing responded with additional tariffs on US imports and Canada and announced a 25% tariffs. Canada announced 25% tariffs on US imports with immediate effect. A standoff between countries could upend nearly $2.2 trillion in two-way annual trade. The fear here is that it's going to slow economic growth. And when you have a slowdown in economic conditions, it's a situation where banks specifically make less money because fewer goods and services are traveling through the economy. Ford and GM, that have vast supply chains across North America, fell 3% and 4% respectively, while housing stocks touched the one-year low. NASDAQ, such as NVIDIA and Meta, fell, while Tesla dropped 6% after weak monthly China sales data. Investors are pricing in that surcharges will fan inflation pressures, dampen demand, and eat into corporate profits at a time where recent data has resurfaced expectations of stalling economy. Domestically focused Russell 2000 fell 2%. Traders also added to interest rate cut bets with Federal Reserve now expected. Jimmy, here's a question for you. Do you think the Fed will cut rates in the next few months?
No.
Yeah, I think not either. And the market is now pulling the next rate cut to May. What do you think about that?
Well, they can't really cut rates if the tariffs are going to go in and out, unless Jerome Powell has secret information about what Trump's real plan is. That would really affect the economy negatively. Secondly, even though the data is quite good, Powell hasn't actually made any additional arguments about the data-based rate cuts. He just said, we're going to expect the data. Now, if the data comes in, the tariffs have impacted inflation. Well, obviously, he cannot have a reason to cut them.
Yeah. And on top of that, let's say, for example, that today we got a very clear picture of where the tariffs are going to land. That's still going to take several months to play out through the economy. And we're not going to see it in the data until like second half of this year. So
it's true, but also the companies did have an expectation that these cuts would, these tariffs would come. So you don't have to reason with that as well. They've already been impacted to an extent.
Yeah, Yeah, exactly. I think we're seeing some in front loading of imports. But I haven't seen any price actions in anticipation of tariffs. So they have accelerated imports. I think since the election, so November,
Well, yeah,
December,
just add,
January.
I think the real data point here is unemployment. If unemployment rises due to the tariffs, even if Jerome Powell is told that the tariffs will be repealed at like by the end of 2025, he will. In that case, the only exception would be he would be forced to cut rates in proportion to the increase of unemployment.
Yeah, I don't think that's true. Let's say, for example, so the unemployment rate, I think, hold on 1 second, let me just see.
It's not high.
Okay, hold on. Unemployment for February, which is going to be announced on Friday, is the U3 unemployment rate. Let me just see 1 second. Is expected to be 4.1%. So let's say that ticked up to 4.2%. So instead of 4.1, 4.2. Do you think they cut then?
I think, according to his database approach, it would have to increase in proportion to the expected cut. So it would have to increase 20% with the expectation that it will not end without a cut. So if he would make the argument that without cutting, it would increase to 5.5 or something like that, then he could make the argument to cut, in which case it would stay equal at 4.5.
Yeah. So at what level of U3 unemployment rate do you think the Fed would move to cut to prevent further deterioration?
Alan Greenspan-esque, it would be like the mid-90s. It would be around 5.5 to 6%.
Okay,
That's the expectation. It wouldn't actually have to occur, though.
I agree with you on that. Yeah, that's a huge jump. You could have said that at the beginning. If you were a better communicator, Jimmy, you could have said at the beginning and save us the last 2 minutes. I'm joking. All right. I don't see that happening in the next few weeks here, though, do you?
There are a lot of doves on the board right now. They could be pressuring Powell to cut.
No, I mean, do you see the unemployment rate rising to 5.5% in the next few months?
No, but I think the issue is he might get data where he's forward-looking that it could rise to that point. Because he says that the tariffs will not be repealed by the end of the year and unlikely to be repealed by next year. So the only way to counter the risk to the economy would be to cut.
I mean, I agree with you that I think the employment numbers are going to come in weaker than people think for the next few months. But going from 4.1% to 5.5, 6% unemployment, I think would require a 20, 30% drop in the markets. Because I don't think the companies will cut employment until their stock prices plunge and panic sets in. I don't think it's going to be a gradual easing of the market. What do you think?
Maybe Jerome Powell's been told that Trump will gradually increase tariffs on China, thus increasing prices of things.
Well, that happened already. We know that happened.
10%, it's not much. It could be 10% every 4 months until China makes a deal. That could be something else.
That's not going to happen. Come on. Do you think that's going to happen?
I feel that Trump will threaten a lot. I do feel that the market will have extremely negative expectations about this negotiation because the negotiations already happened the first term and they didn't lead to anything. Even though the Biden administration kept almost all of the tariffs on except for steel. But the China tariffs, it led to a negotiation that ended with nothing. And I think that Trump is going to add so many caveats to the China negotiation to create so-called fair trade, which I feel China just doesn't have the need to counter in any way. It would just raise tariffs. It feels it's been pretty much protected due to if you go to China, inflation hasn't impacted the economy substantially, and they could just tell people, this is going to be a temporary thing for the next few years. We could expect tariffs to go up, but the economy will be fine. We have the reserves to flood the economy with stimulus, which the Americans don't have. And if they're negatively impacted, we'll be fine. So they may not play ball. And Yaman, my question to you is, what happens if China doesn't play ball? It refuses to negotiate. It just increases and ramps up tariffs.
Yeah, I mean, this can definitely escalate into a war. Tariff wars can escalate into war. Do you think we are in a tariff war today?
It will become a tariff war if Xi Jinping refuses to negotiate. He might invite Trump and his team to a meeting, but otherwise would say we're not looking to agree to anything right now. They would say we just feel that the current tariffs you're imposing on us are completely unfair, and we are unwilling to make a settlement of any kind. And then Trump would leave without any kind of win whatsoever. It would make him obviously look bad, but he'd be forced to increase tariffs.
Why do you think he started with Canada and Mexico to kind of make an example?
That would be a very long conversation. I mean, there's so many spaces about cartels and Mexican policy, the issue of letting in Chinese companies to manufacture, selling to the American market, the protectionist policies Canada has, its unfree market when it comes to banking. And according to the logic of Trump and the next administration under J.D. Vance, if it happens, these countries are incredibly protectionist despite NAFTA. They're very unfair. And that's the logic. And they're not going to change, though. I think that's what people don't understand. Canada will not open its banking system to American banks, ever. I don't see it happening. Likewise, they have an election coming up pretty soon, and none of the candidates have talked about opening up their economy. The Mexican leader has essentially refused to agree to anything with Trump except for the border. So there are no economic concessions. Under this, if he knows he's going to hand the reins to J.D. Vance, and there's not a single win for his tariff policy except for increasing prices, what is he going to come away with it? Is he going to say that Mexico just refused to bend? Is he going to threaten to end NAFTA? They have to make an agreement of some kind, though, right? And they're not willing
I
to.
don't know. What do you think he's going to talk about tonight?
He's going to talk about why tariffs are important, the history of tariffs with China, how we gave China a lot of stuff. Probably we'll talk about technology transfers, how it's extremely difficult for American businesses to currently operate in China. And you might go through one or two examples. And then he'll lay out a roadmap for increasing tariffs. And that will be it.
Okay. All right. Let me just finish this article real quick. I kind of try to do a couple of things consistently here. But thank you very much for sharing your views. New York President John Williams' comments later in the day will be parsed for central bank stance on monetary policy. Interesting. Let me see when he speaks. Give me 1 second. I went to New York Fed, by the way. I posted that if you saw, but their burger is like $5, shameless subsidized, and I'm like, why? No wonder why you guys missed the inflation trend. As of March 4, there are no public announced speaking engagements for composer conductor. No, what are you talking about? Man, these chatbots are not very smart. Oh, push on. Oh. While deep research looks into it. U.S. shares of building miners such as Harmony Gold Mining rose 4%, tracking higher gold prices. Target lost 6% after Jimmy. My next question is about this. Target lost 6% after retailer forecast full year comparable sales below estimates. Best Buy fell 15% after electronics retailer issued a downbeat forecast, while Walgreens jumped 7% as a report hinted that the pharmacy chain is closing on a take private deal. That's company specific. So, Jimmy, pretty consistently across retailers, we're seeing weakness in outlook. I don't think people were expecting this. I don't think economists were expecting weaker outlook by these companies, now including Target, Walmart, Best Buy, even Nvidia gave a weaker outlook than expected. Do you think this is a trend, or do you think this is a hiccup?
It will be a trend. They will change the names of it. They will also be increasing prices over time, partially because of the tariffs. They have no choice but to. But consumer demand is going to go down gradually. People realize that inflation will probably never end, not for the next some years, and therefore they can't spend as much, right? And this is going to be an opportunity, really, for these businesses to admit this in their quarterlies and say, well, we expect lower demand. We cannot decrease prices. There's going to lead to increased competition, too, for a much smaller amount of consumer demand that exists. So we're going to basically lower our forecast for the next few years. And I think it's actually quite a good thing, Yaman, if you think about it, in terms of the financial health of most of these companies, that they can finally admit it to the market, because all the other companies will have to admit it too, at the exact same time.
Jimmy, you sound very bearish. Are you short anything?
I am. I am shorting things now.
What are you shorting?
I'm shorting pharmaceuticals. I'm also shorting minerals. I think that there has been a commodity super cycle, people forget, that will also be impacted. Don't forget, gold has gone up a lot because of the expectation of tariffs, the downward decline of the international economy, and the fact that in China, you can't really do very much for your money except for buying gold and real estate. And real estate has been very bad as a market, right? So at the end of, you could basically say it's kind of a bubble. And many commodity prices have been impacted by this. I could give some examples if you want, but chocolate.
What do you think about oil prices?
I think oil prices will go down. But, let's not forget this. They are impacted by completely different demand levers. Saudi Arabia can, push OPEC to do something, right? But look at all the other commodities. As I was going to say, chocolate is up 10x in the last 4 years. 10x. It's
That's
just
because
small.
I started eating more. That's why. Let me go to Luce. Luce?
Another thing that I would like to add is that for the longest time, I always thought that the US economy was gonna be the future. And right now, I'm looking at the European stocks, and I think there is a chance that there is gonna
Luce,
be growth.
you got Intel wrong pretty badly. I
Well-
think that after such a mistake, you got to take a step back a little bit and maybe think about what went wrong, reflect on it, and then come back. Don't come back the next day with more recommendations. Go ahead.
Well, Yama, since I bought Intel, I made like 22% in 1 month. And then I sold, and I was like, sell. Okay, I timed it perfectly, so it's not like I lost money.
I don't know. I think you said sell after it dropped.
No, Yama. It went to 27. I didn't sell because I hoped that something will I hoped in something, and then I sold at 24.5.
Yeah, and then you announced it after that. I think it was on the last week you announced it when the stock was around low 20s, right?
No, Yaman. No. Look, 2-3 days ago, it went over 24.
All right, I'm gonna go back to the tape on that one. Let me take some notes here. Okay. John Williams, President, CEO of Federal Reserve Bank of New York, is scheduled to participate in a moderate discussion at the Bloomberg Invest event today, March 4th at 2:20 p.m. Eastern Time. So that's in about half hour. This event is organized by Bloomberg. And then a panel discussion on March 7th. So we're going to get some comments today from the Fed about tariffs and recent volatility in the stock market. I'm sure he's going to get called up, and especially New York Fed. They're more focused on markets. So somebody has to ask him about the burger prices at the New York Fed. Anyway, Tesla down 4%. Nvidia was down, now up about 2%. Other stocks are mostly in red. I think the breath is down a little bit today. 1,200 stocks made a new low today. 100 stocks made a new high. Yeah, I mean, technicals, the breath is low. Technicals look a little worse. Financials down across the board today. That is so wild. Let me look at this a little bit more. I think this is a bit of a dead cat bounce by Nvidia. I heard comments around there's still being some FOMO. Most active traders are still buying into Nvidia and Tesla. Those are the top two most traded stocks. And I think people are feeling FOMO a little bit, trying to kind of time the bottom. But in my opinion, they're trying to catch a falling knife here, and I think there's more room to fall. And healthcare stocks are up today. Okay. Sorry, healthcare stocks are mixed today, up in the last week. Google is up 2%. Jimmy, what do you think of Google? It's trading very cheap.
Fantastic company. Cash King uses technology from the 1990s to produce huge gains. They're basically a bank. They are an absolutely awful company. I think we've had this conversation 6 months ago. I don't think you remember this. We were talking about Google. I was explaining why it was actually a really bad company. And if it wasn't for the fact they do a lot of lobbying, they wouldn't even exist anymore. So that's what I think about it. Again, we had this conversation 6 months ago. Maybe you forgot that.
Are you buying it?
No, I am not buying it.
Really? It's down about 17% in the last month. PE ratio 22, market cap 2 trillion. You're another buyer here, even though you think it's a fantastic company.
I think if a JD Vance administration comes, maybe the judicial system will have enough power over these types of companies to finally break them up. And yeah, you could say, oh, about the Silicon Valley types.
Wow.
The Silicon Valley types are the ones who know how bad Google has been to the startup industry, to America, to so many things. I mean, take, for example, the Play Store. You have to pay a fee, and if you don't, you can't be on it anymore. Let's say you're Roblox. You aren't really interacting with the Play Store that much, but you happen to be on it. You have to pay them a fee still, and yet if you do anything that Google doesn't like, you get delisted so it can block any of its competitors. I mean, it doesn't matter what you're doing. If Google just finds your company that in some little way overlaps one of the Google products, they can kick you off and you have no recourse whatsoever. And those who have competitors' search algorithms, they have no recourse because they'll get delisted from Google search. I mean, if you don't know anything about how Google's been working the last few years, millions of Americans have been impacted negatively by the Google algorithm, losing their websites to search to AI now. It's nothing, as I said before, than a dead internet. If you type in pretty basic products, most of the things that you see now are cheap AI-generated content and then tons of sponsored Google stuff. That should be illegal because a lot of it is linked back to the Google buy stuff that they get money for and connected to their own companies and their own products. So let's go for AI. Type in AI. How many Gemini links will you get there as sponsored links? That should be illegal, and yet they're able to get away with it. The list could go on. I could talk about it for hours. They're nothing more than a highly predatory, monopolistic company that has destroyed the heart of the American startup industry. And if they're gone for good and you're broken up into 5 different components, their banking section, their algorithm bullshit section from the 1990s from Google search, their random products, Android, and their stupid phones, that would be good for the American economy.
Okay, Jimmy, thank you. Luce, I have you recommending that not recommending, but I think on February 24th, I have you recommending Intel here and ASML. Am I wrong?
That's the truth.
So that was when the stock was 24, you were recommending the stock. And then I think you sold it the next day, and now it's at 21.
Yep.
Yeah. Okay. So Jimmy wants to break up Google.
Not the only company that needs to be broken up.
Who else do you want to break up? Apple?
Oh, wow. No, actually, surprisingly, not Apple.
Microsoft?
Microsoft. Amazon needs to be broken up. Lockheed Martin needs to be broken up. Boeing needs to be broken up. Anything with stranglehold on certain sectors of the American economy need to be broken up. I think the difference with Apple is they only have a handful of products, and they're highly competitive spaces. I'm not asking for Facebook to be broken up. That'd be kind of ridiculous.
You don't see any risk to Google search from ChatGPT?
Oh, sure, there will be risk. It's not that competitive, though, because of the illegal practices that they pursue.
Okay. Chris?
Yeah, I bought some Amazon shares today. It was down under $200, $2 trillion valuation. I saw they're implementing Claude into the new Alexa Plus system. It's going to be an agentic system that can do stuff for you. So I'm looking forward to buying that and testing it out. I'm curious if you guys have any thoughts on that. Jimmy just brought up Amazon, so that's why I thought of it.
Well, I would talk about some of the Amazon products. Name me a successful Amazon product in the last 3-4 years.
The Amazon Echo series.
So you know they've been losing money on that for years. So now your expectation is with AI, people start buying Echoes. Is that correct?
I mean, Jimmy, isn't it correct though that AWS is still leading? Their margins are now growing, and also on top of that, they were as of I think about a year ago, they were seen, or a year to 2 ago, they were seen as far behind of anyone else on AI, and then they appear to have made a really good move with Claude buying Anthropic, or partner with them such a close. I think did they buy Anthropic or partner with them very closely? So now I think Claude is training on Trainium, and inferencing I think is also done in Inferentia, and they're coming out with their third version. So that's a very impressive turnaround by Amazon on the AI front. What do you think?
I don't deny anything you're saying. You could go through a list of products that they've tried, never worked. This is not an innovative company. If you're talking about almost all the revenue comes from AWS and will come from AWS in the next few decades, I wouldn't disagree with that. The question is how scalable will it be? Chris is doing it down. But, give an example. They were trying to compete with Steam, right? This is a known product that they were competing with. They did a lot, though, to try to compete with Steam. They bought Twitch. They thought that by getting Twitch, they could have the influencer power to talk about their products and so forth. And they did a lot of other stuff. It didn't work. And it didn't work because their product was bad. But they are not saying that. They're saying Steam was just too good of a product. We couldn't best it in any way. I can't think of a single product that they've tried to buy or tried to make themselves in the last 4 or 5 years that's been a success. Now, I do have to admit something else. When you keep on saying they partnered, if this had been a different administration, from not this administration, the Biden administration, they were allowed to simply go out and acquire things without the SEC coming in and saying it was anti-competitive. they would have bought Anthropic. Straight out, they would have bought it. They weren't allowed to. They wanted to buy a vacuum cleaner company. Remember those little robotic things? They weren't allowed to do that. They have the cash, guys. Innovative stuff. Question to Chris. What do they use the cash for?
So Jimmy, I'm on Amazon.com right now, and we have Echo Dot 4.6 out of 5
Yeah, I know
stars.
no one cares about Echo.
Okay.
Okay.
All right. Sure. Well, I think it's important.
Chris,
because-
I think your risk here is a macro downturn would probably hit Amazon more than others, and especially obviously the retail side of things, and also I think you're going to see a bit of a depreciation increase in companies like Amazon, and I don't think AI agents that Jimmy just talked about is going to catch on as quick as people forecast. I think AI agents, like obviously robotaxis, AI agents, same thing. Robotaxi is just the AI FSD driving for you, being an agent for you, making decisions for you. These are 5-10 years away. And
Yeah, I agree. It's a long term.
nobody is going to reimburse your stupid AI agent booking the wrong flight. So you're going to be out $500 to God knows where when you just want to fly to Austin, Texas. All right.
Yeah, we'll see. I think there's a few ways that Amazon benefits from AI. One being they have millions and millions of these Alexa devices already in people's houses that are going to partner with Anthropic. The other way is the cloud computing, and the other way is AI robotics in their factories.
Could I ask Chris?
I think robotics will probably help Amazon, but sorry, Jimmy, go ahead.
What does your phone do that an Echo can't do?
Yeah, I don't use Siri and I don't use Echo. So, Apple's saying that they're going to make Siri way better. So we'll see. We'll see how it shakes out. I'm going to test all the different options.
I just want to be honest. I have Echoes. I use them.
I don't care about Echo, guys.
Okay, no Echoes. But my point here is this: all these companies have huge cash hoards. If they don't want to start acquiring things, which they should be allowed to do right now, what is their plan of scalability? Right? They need to be innovative again. And there are very few companies I see in the top 10 that are actually using their cash wisely. I mean, at least Apple tried to do VR. Did it do VR AR very well? I mean, it's an initial product. No one really bought it, but at least they're trying their best. I would still ask.
Chris, thank you, Jimmy. Chris, give me 3 sentences why you bought Amazon. Just 3 sentences, top. You can do 2 if you want.
I love the product. I use Amazon Prime all the time, and I like the leadership.
Okay, thank you.
I would like to ask a quick question to Yaman. Warren Buffett has not been using his cash to buy. Now, do you consider him bearish or do you consider him very conservative? I would argue that he's just a very conservative guy. Just because you're not selling your companies and shorting things doesn't mean that you're bearish. So I think there is a difference there.
I mean, he says that they will. I mean, in his letter, he said, "Don't assume that we're being." I mean, I don't want to misquote him, but he's saying longer term, we're always going to prioritize U.S. equities. We're always going to prioritize equities over bonds. But the actions here speak very loudly. I mean, he's got record levels of cash, and I think that says something. And if you look at, I mean, he also has reason to believe that, markets are a little ahead of their skis. And so I think he's on the bearish side of things right now. I wouldn't expect him to short, obviously.
When you believe there's nothing worth buying and that everything is massively overvalued, is that a question of the productivity currently of the American economy, or the expectations that the technology that you would be buying is not worth it, that would not lead to any GDP gains in the near future? That's a definite question that we need to ask. It's one of the reasons why Elon seems to be making fun of SoftBank all the time. Did you see his recent tweet replying that SoftBank was massively overlevered? I often
Yeah,
ask.
I watched the SoftBank guys Masa's interview this morning, and he doesn't like he says things that don't make sense sometimes. Like, for example, he talked about how they're going to give 10x more GPUs to OpenAI, and they're going to be 10x more powerful. And he threw another 10x in there. I forget what it is, but I don't think it's that simple. I don't think the AI efficiency, or let's say AI effectiveness improvements, are that simple. Like 10x, 10x, 10x. Like we just, yeah, I don't think it's that straightforward anymore. So I think he's over investing here. I don't know how leveraged they are. I haven't looked. I didn't see Elon's tweet about SoftBank.
And it's a shame to say you're over-investing currently in an economy where there's barely any investment. If you look at PE acquisitions, VC funding, et cetera, it's actually very little investment going on compared to before. Obviously because of higher interest rates, but also I think people are just putting in an expectation for the next 10 years of the economy. It's not that innovative. They don't see where the growth will be. And if you look at how PE's been investing their money, it's kind of sad what they've been using their funds for. I mean, the biggest names are using it for credit. It's kind of pathetic. 10 years ago, they were using it for all sorts of technology. Just a shame.
Who's using it for credit?
Well, everything from D. Shaw to some of the companies in Boston, even some of the Morgan Stanley funds have been spun up in the last 3 years. They're going to private credit, and they're trying to reorganize the market now.
Yeah, it's really interesting because credit spreads are super tight right now. I mean, they're historically tight, and there's clear indications that there's this growth slowdown at a minimum, if not a recession, if not a stagflation brewing in the near future here. So it's surprising that credit spreads are so tight. So if I was trying to, I could buy some sort of if I was running a long portfolio, I would seriously look into buying credit default swaps, CDSs, at these prices. That's like an easy, I don't know. It's like a layup, but I don't know. Jimmy, what do you think? Let's switch to Tesla. What do you think about Tesla's sales halving in China when BYD's sales are rising rapidly?
Not surprising. They're halving everywhere. In fact, they've been worse in many other countries. But when it comes to China, when you visit China, you just see why. Their product is not that good compared to the other products. And when Chinese people complain, it's often about the after-sales service of all the products, BYD and so on. Wait times to get a new bumper and so forth. Tesla is not doing better, even when it does not come to the car itself. They could have done better. My point is this. There was so much opportunity that they missed out on, and they just threw it away. Last 2 years have been pathetic from Tesla. If you went to their seminars that they host at cafes in different big cities in China, they would showcase their car and they would talk about, the benefits. Now the benefits are not that strong. And people would ask the same questions. They never really got good answers, mostly after sales service. Why is it that a Tesla owner in China still has to wait 6, 12, sometimes even longer for a part? They're not able to drive their car. And yet the factory is still there.
It's crazy. It's crazy. Exactly.
That's a big deal in China.
Yeah. So Walter Bloomberg posted a few hours ago, Tesla's China-made EV sales fall to lowest since August 2022. James Katz says, pretty dumb headline with no context. Also, the little blurb on there is wrong. Sales are not down due to EV competition. Yeah, that's a stretch. I mean, I can see why Troy disagrees with this. Competition is definitely eating into Tesla's market share. And James says sales were down due to production ramp. China is the only market where Tesla is not demand constrained at current prices. Yeah, that's So Troy, I'm going to pin this at the top. Troy says, I disagree with James's comment. Demand in China is weak because Tesla's order page shows only a 2 to 4 week wait time for the new Model Y standard range rear-wheel drive orders placed today, which makes up nearly all Model Y sales in China. I mean, that is a stunning fact, you know, that within just a few weeks of production start, we're seeing basically no backlog for the Model Y standard range rear-wheel drive. Troy continues. Meanwhile, Model Y Juniper production happens to be low as well due to the design refresh, but that's not the main issue. A manufacturer that doesn't have a demand problem in China is Xiaomi. Their order page for the SU7 now shows 34 to 37 week wait time, which is stunning. So despite, I mean, Tesla had this problem 2-3 years ago where even though people were waiting for a year, they were waiting for a Tesla. They weren't buying, most people were not choosing to buy other EVs at the time. And now that appears in the Xiaomi brand as opposed to the Tesla brand in China. And SU7 is a better vehicle than the Model 3. And more importantly, in the next few months, the same company is coming out with a YU7, which is going to be an obvious, demand. It's going to create a demand issue for the Tesla Model Y. And I didn't expect this until the second half of the year, but clearly it's already impacting sales for the Model Y in China, the new Model Y in China already, and it's on the March. So that's a real problem for Tesla. What do you think, Jimmy? And that Chris,
Let's not forget, Xiaomi is very different. Their products are connected to the iOS of the Xiaomi phone. You get certain discounts too. Like you can go to different cafes and get discounts and so forth by having a Xiaomi car. It's like a mobile loyalty card. It gives you, they have an app as well. It's like really popular. Tesla doesn't have any of those things. So it's just more embedded into the Chinese economy in terms of the benefits. And furthermore, Xiaomi is also going to produce smaller cars for cheaper. And that's something that's becoming more popular in China as well, which Tesla is not doing.
I mean, that makes sense. But on the other hand, the vehicle is also a little longer, has a bit more leg room, which apparently is a big deal in China. It has more buttons that people like. So it's not just that they are a Chinese brand and better integrated into the economy. I respect your input there because I obviously don't have that kind of insight into it. So I
When the
respect you
phone
for
is very
bringing that in here,
popular,
but it's
the
not
car
the product is
is very
also better. The product is also better than the. I mean, I think the range is a little higher too than the Model 3. So
That's fair. I would just add, people are also impressed by the phone. I know it sounds ridiculous, but the phone is really popular, guys. And so in terms of customer loyalty goes into that direction. People would not have accepted the car, even with all the benefits. And there are other cars with other benefits too, guys. If it wasn't for the brand of the phone too, which it's just really popular in China.
and also it's cheaper than the Model 3 as well. So it's about 5% cheaper than the Model 3. And then the range is 497 miles under the CLTC standard, as opposed to 443 miles. So it's 5% cheaper, 10% longer range. Acceleration is better, about 10%. So it's something between Model S and Model 3. It's kind of like a 5 Series type of thing, but it's better and it's cheaper. Better on all fronts, cheaper on all fronts. So
Have you compared it to the BYD?
1 second. Modern design with a 16-inch infotainment screen as opposed to 15 for Tesla. Integration with Xiaomi smart home ecosystem, like we discussed, and the advanced driver assistance system. And it was able to overtake. So this is the critical thing that I definitely did not expect. Okay, but it was a critical reason why I shorted Tesla is that it overtook the new Model 3 sales within 2 quarters of production start. So there's lots of evidence that the Chinese automakers are willing and able to ramp production at a much faster pace than Tesla ever did in any of its factories for any of the products. So I have no reason to believe that the Tesla Model Y will not be hit just like the Tesla Model 3 was hit by Xiaomi's products and BYD's products in the second half of this year. And now that we know Model Y sales are already, like Model Y backlog is already vanished in China. I think it may be even quicker than I thought. And by the way, to further kind of look at, so in the last week or two, I spent some time comparing different LLMs. And I've set up a coffee bet between me and these 3 deep research type of LLMs. So Google, ChatGPT, and Grok. And I'm going to pin that bet up here while Jimmy talks. Jimmy, go ahead.
I do also want to mention something. Their marketing is really good. They have all the major influencers, actresses on their marketing campaign, something that Tesla doesn't do. And I think that people should appreciate that and attempt to actually market the product. It means the product does a lot better, too.
Yeah. Okay. Man, I tweet too much. I can't even find this fucking thing. Do you think that competitive landscape is going to play out in Europe as well? I mean, it's not going to play out in the US because these Chinese automakers are not allowed to compete in the US. But do you think Europe or other parts of the in other parts of the world, do you think Chinese automakers will cause trouble for Tesla sales?
Right now, they are, but in the future, they may not due to the tariffs. We have to admit, as you said before, these Chinese cars are better, but they're not being sold in Europe at scale. Xiaomi, for example, is not in Europe. So for that reason, Tesla will probably be fine overall in some of the markets, although their sales have gone down. But what Tesla really needs to do is produce smaller, cheaper cars that would really fit the European market. And Renault and those other companies are doing that. So that would be my answer.
Okay, so I posted the bet at the top. Xiaomi YU7 beats Tesla Model Y sales by December 2025, I said. This is in China, obviously. And ChatGPT estimated early 2026. Gemini 2.0 Flash estimated late 2026. And Grok 3 said late 2026 to early 2027. So we'll see. Man, why do you think these LLMs are... I don't know. I honestly feel like the rate of progress has really stalled for LLMs. Do you agree with that statement or no?
You think the LLMs are slowing down due to the lack of compute, or simply because consumer expectations are that they should have gotten a lot better?
Well, I don't think compute is the problem. Yes, I think the expectations have risen, but like for me, Grok 3 makes the same mistakes as Grok 2 did. ChatGPT still makes a lot of mistakes, very confidently. So yeah, maybe you're right. Maybe my expectations are high. Okay, let's see.
Can I jump in here on Tesla?
Yeah.
I don't know much about China. I don't have any on the ground experience there, but it seems like they're getting crushed over there. And I think the profits are coming more from North America and Europe, where they're now facing headwinds. I live outside Boston. A lot of Teslas in my neighborhood. The superchargers are getting lit on fire. I'm just thinking today about how that plays into people's car buying decision. I think it's sad. I hope those people go to prison, but I think that it is a factor. Like, people don't want to have like corporate terrorism targeting their cars and their chargers. For me personally, I recently sold my Tesla and bought a Toyota. I almost want to buy another Tesla just out of spite to the people who are setting chargers on fire. And
Yeah, I mean,
honestly,
there's gonna be far more people that are scared to buy a Tesla or even get rid of their pet Tesla. Like, imagine a dad with, you know, who is, basically a father to a family of two. And I mean, women are already scared to sit at a supercharger. I mean, when I asked them, over the last year or two, when I was looking into why Tesla ownership is such male dominated, even before Elon went berserk in politics, women would tell me that, they just don't want to sit at a supercharger, like a sitting duck there, at the back of some building at night, especially with their kids. So now you're seeing all these headlines around, burning superchargers, setting off dozens of Teslas on fire at dealerships or Tesla stores. And that's going to make things even worse for people who are concerned. And,
for sure.
some people are getting rid of their. And by the way, I think I talked here a couple months ago, about going to, Boston and kind of seeing some of the really like far liberal commentary and the hate against Elon. And lo and behold, I think it was a few days ago, that's the supercharger station that was burnt down is in Massachusetts. So I think people that are basically in Silicon Valley really underestimate the hate against Elon and Tesla in liberal cities. And this
Yeah,
includes
crazy.
Boston, Philadelphia. You got to mute yourself when I'm talking, Chris. Go ahead. Thank you.
Yeah, no, it's nuts. I mean, I'm the exception.
Sorry. When I said go ahead, I meant just go ahead and mute yourself. Okay, so Boston, Philadelphia, New York City, even Austin, Texas, Los Angeles, Seattle. So I think people really, and also like across Europe. So this is, France is another one where they set off a bunch of Teslas on fire. And people who bought cars, whether they agree with Elon or not on politics, they don't want their cars to be burned to fucking down, So I think to the extent that these things kind of exponentially increase on the headlines, I think you're gonna see some people getting rid of the Teslas, but at a minimum, they're gonna choose other cars. So so we're seeing, Q1 delivery estimates plunge on Kalshi. I don't think that's going to be any different in Q2. And I don't think Model Y sales are going to pick up to the extent that people think that they will this year, because of the innovations around kind of all the stuff they put into the new Model Y. Which, by the way, is a little surprising, because like you would expect the range of these cars to be around 400 miles now, and that's not even the case anymore. So clearly the range hasn't improved that much from Model 3 to Model 3 Highland, Model Y to Model Y Juniper. But yeah, okay. Jimmy, any other words? We have John Williams starting to speak here, so we should expect some headlines on that.
Sure, I would just say this. If I was in Tesla, if I was working there, if I was the VP for strategy, these are the things I would have done and will do. One, Tesla has lost its aura that it symbolizes success. What I mean by this is the Plaid used to be seen as an amazingly fast car, is an example of the luxury features of Tesla. Now it's a big fat truck. It needs to produce a supercar that beats everyone else. Under, obviously, the best Tesla technology and Elon Musk driving. There are amazing supercars right now, which like Rimac out of Croatia, which works with Bugatti now to produce amazing supercars. BYD has the Yangwang U9 that just came out that is going to try and compete with that, and so on and so forth. I don't see why Tesla can't pursue something like that too. Number two, Tesla needs to start marketing. It's almost arrogant to think that in the markets it's trying to get into outside of the US and Europe, it doesn't need to do any marketing there. People know who Elon Musk is, but people also don't know what the purpose of the car is. I mean, in Xiaomi's example, they say in Chinese, like phone, home, car ecosystem. It's all about the Xiaomi brand lifestyle. You should own a Xiaomi car now, a Xiaomi smart device, and a Xiaomi phone, and you're gonna be better off than everyone else. What is the benefit long term of Tesla for someone who lives in Brazil, Thailand, or Singapore? It doesn't mean very much. And thirdly, Elon should probably resign and be a figurehead chairman, show up sometimes, and find an amazing innovator.
Jimmy,
Okay.
thank you. Krebs, go ahead.
Hi guys. I live in most of the year in Europe, and I spent 6-7 months in California. When I came to California first time years ago, when I noticed Tesla's, that was so beautiful car. Technology top. But in the last 5 years, I also watched in China. Technology didn't improve so much in Tesla cars like improved in China. The quality of Tesla is far worse than quality of cars from China. Still, in China, Tesla brand is the West brand, right? West side of the world. So they are still gonna sell those cars pretty well. But competition there, it's just amazing. And that's what is missing in USA. Guys, we don't have nothing except Tesla in this country. Basically nothing. And in my opinion, it's working against Tesla brand. Cybertruck, why they did that? For what? To show the world that, okay, we can create something like that, but who is going to buy this? The quality of this car is just disgusting. Look at the cars from China brands. Stitches, leather, everything is there. Tesla is just a plastic, fantastic car. And it's pricey. Simple, the same what I see in Europe. Okay, we have Teslas. We still think that Tesla is the best on the world. Of course, it's a very good car. Nothing about that. But the quality is not the same what some part of the world's needed from the car companies, right? That's what I think. Thank you, guys.
Okay, thank you. All right. Couple of other things. Tesla chair selling off most of her stock at pretty high prices. You know, she made like hundreds of millions of dollars off of Tesla for doing nothing, basically. Like literally to do nothing, she made hundreds of millions of dollars, which is amazing. Anything else? BYD raised $5.6 billion in stock sale. BYD is developing 1,000-volt architecture. Let me just read this real quick. BYD's 1,000-volt high voltage platform, which offers ultra-fast charging over 5C, will launch in mid-March, local media reported. BYD will then start implementing 1,000-volt charging on 2025 updates of its models and conduct large-scale construction of ultra-fast charging stations. Models with 1,000-volt support will be rolled out gradually in the coming months to the high-end models, allowing charging of 300 kilometers in 5 minutes. AutoPixel reports. Compared with the 800-volt platforms, every additional 100-volt increases charging power by 25 kilowatts at the same current. High-voltage platforms reduce the workload on the battery, generating less heat. This improves battery longevity and enables faster charging. They also benefit electric motors, allowing them to achieve higher speeds without increasing size. The report also revealed that BYD is working on pure electric architecture, codenamed BOX, to improve energy efficiency and system integration. The 1,000-volt charging platform will be implemented on BYD's high-end models, such as Dynasty series. The report specifically mentions Han L and Tang L, which were teased in January and will launch later this month. Those models will be the first to feature BYD's 1,000-volt charging. Car News China previously reported that Han L would adopt a 945-volt high-voltage system, blah, blah, blah. God, it's a long article. However, BYD is not stopping at 1,000 volts. In November, leaked information showed that BYD is working on the world's fastest battery for electric construction machinery. It will feature 1,500 volts high voltage platform with a 400 amps max current, up to 600 kilowatt charging power, over 7,000 life cycles, and a maximum capacity of 2,500 kilowatt hours. The battery will have lithium iron phosphate chemistry. Yeah, I mean, this is just ridiculous. This is crazy. This is so wild.
Could I ask Yaman about, has he heard about the Neo magnetic suspension for their new car, by any chance?
No, go ahead.
Well, I don't know if you remember this, Bose was a company that was building a magnetic suspension system. It was bought by Neo, and finally Neo came out with the car. It's now released a few weeks ago. It's the best suspension system ever. And to go back to what the guy was saying before, if these companies could be seen competing in the US market, people would notice that each of these individual Chinese companies are great at a particular part of their car. Neo does suspension, Geely does charging really well, and as you said, there's some other companies that do different things. So that lack of competition, question, what do you think Tesla is going to be doing really well compared to these Chinese companies in the next 5 years? What's their argument going to be? Is it just going to be FSD?
I don't see how Tesla can compete with these automakers. And also, I don't think they're going to be able to compete on the energy side either. The only thing is, let's say, for example, that Trump administration in fact succeeds in limiting GPU exports to China. Let's say China can't develop in-house GPUs that are just as capable of NVIDIA chips. And Tesla is like handed these extremely valuable AI chips or something, and then develops this amazing brain for Optimus or robotaxis or whatever. But I think that's a very low probability event. I think for any other thing, or literally even this one, Elon has to get back to Tesla. Like, Elon has to get back to Tesla 100%. Without that, zero chance Tesla's outcompetes these automakers or companies around the world. And I think the probability of a bankruptcy is not 0% for Tesla without Elon. So, and honestly, like, I don't see how he can get back to Tesla. He's so focused on politics, on Doge, okay? And then on top of that, in a few years, he's going to be 60. Like, he's not going to be sleep on the factory floor at 60. So I don't know. What do you think?
I don't think the age is the issue. Lee Sun is the owner of Xiaomi, and he's, I think, 65, if I'm not mistaken. He's also kind of like the marketing guru. He's a face on all the campaigns. So Xiaomi is also one of the very few companies where they, like Elon, use the owner of the company as part of the marketing. I don't think age is the issue. And he does sleep, he says, on the factory floor. What Tesla could do.
He says a lot of things, man. He says a lot of things, and 90% or corporate puffery. Okay? Corporate puffery is the new term. That's what the cool guys call it. That's what the people who get paid billions of dollars to win cases call it these days. Corporate puffery. Okay, let me read to you what that means. if you will please excuse me for 1 second, let me pull this up and pin it up here. Okay, so let me just read to you this is my Bible now. I have this framed next to my bed. I read it every time I wake up. And before I go to bed, I kneel down next to my bed and read this. Once out loud and once just for myself in my head for good measure. Defendants next argue that several timeline and safety statements 7, 9 to 11, 13, 16, 18, and 26 are non-actionable statements of corporate puffery and optimism. In the Ninth Circuit, vague generalized assertions or corporate optimism or statements of mere puffing are not actionable material misrepresentations under federal securities laws because no reasonable investor would rely on such statements. And there's a bunch of other stuff that I don't understand here because I'm not a legal person. But anyway, Jimmy, basically what the statement says is, since you just said Elon said or something along those lines, I don't remember what he said anymore. Because when someone says that, my eyes kind of just turn red. I turn red. My brain just short circuits, and I remember this thing. So now Elon thinks that you're not a reasonable investor anymore, Jimmy. So what are you doing on my speaker board if you're not a reasonable investor? Anyway, so we're gonna end. That's a rhetorical question. You don't need to answer it.
Okay.
We're gonna end on that note, and then we'll be back tomorrow. Thank you very much, everybody.